we have seen in this year more actual net effective price cuts through the incentives, and some of the builders like a KB Homes full on outright price cuts, right?
Wow.
And what it's doing is it's pulling some of the attention of the resale and existing buyers that would have went there, and they're running into sellers who are just not being realistic.
Alrighty, folks, one of the things that I have never done in my investing career is actually seriously consider new construction as a way of producing cash flow. Well, builders are in such a bind with inventory stacking up to near record levels that some builders, aka Lennar, are getting aggressive and actually courting investors. I've shared this a couple of times on my daily financial news. We've talked about it inside school, but the man with all the data is here, Lance Lambert from Resi Club. Lance, it is because of you that I have personally started negotiating with Lennar on a multi-unit package. So again, thank you for the opportunity and telling us it's out there. I would have never looked if you didn't tell me what was happening.
Yeah, and so pretty much what's been happening is that the longer that we've stayed in this, affordability constrained environment, and as inventory is built in more of these markets, the builders have found themselves seeing the market shift more to buyers, and they've seen themselves need to do more affordability adjustments to move product. And unlike existing home sellers who, when they see an environment like this, they pretty much just pull back, a lot of them, right? The builders, they need that volume to make money. So as long as they can kind of achieve a reasonable level of margin, they're going to continue to move forward. So in an environment like this, you see less of the pullback on transactions like you do in existing, because builders are trying to keep it up, and you see more on an affordability adjustment, right? If they can, to move that product. And so what we've seen a lot of the builders do is really aggressive buy downs, and then go even to bigger buy downs. And so a builder like Lennar, back at the height of the pandemic housing boom, they were doing 1.5% incentives rate on a final sales price to incentives, right? So on a $400,000 house, what is
$6,000?
Yeah,
$6,000.
Exactly.
Nothing.
Very small amount, right? You're right, and that you actually hit the math right on the head. So, Zuber, I always forget how good you are at like those fast calculations. You got that one right away, which is bad because I'm in the data every day, and you beat me right to the punch.
Sorry.
And so in a normal market, Lennar was do 5 to 6%, right? Now some of the builders are more like PulteGroup is around 3 to 4%. Lennar's always been a little bit bigger, but right now Lennar is doing 13.3%. So on a $400,000 sale, that's like $52,500. And now I did that math in my head. I did that several weeks ago when I wrote that article. So,
but think that's $50,000. That's $50,000.
Yeah. And so, whenever builders do incentives, you at the end of the day, it's really hard to know what is a net effective price cut and what is just getting baked in, right? Because in 2022, when rates shot up a lot and builders did a lot of these adjustments, those really were net effective price cuts. But as they kind of, the market kind of stabilized, what the builders were doing is raising price in 23, and then they were just bake it into the incentive side, right? And so it's always kind of hard to know from the outside what exactly is going on. But we have seen in this year more actual net effective price cuts through the incentives, and some of the builders like a KB Homes full on outright price cuts, right?
Wow.
And what it's doing is it's pulling some of the attention of the resale and existing buyers that would have went there, and they're running into sellers who are just not being realistic, right? Some of these sellers not only are not pricing to the market, but they're coming in above the market, trying to they just don't, they're not meeting the reality of where buyers and the investors are at. And so some of the buyers and some of the investors are turning to new construction.
It's funny you bring this up because again, there's one of the stats out there that I don't recall ever seeing before. You'll probably know this because you're in the data. When you look at the average or median price of existing versus median price of new, for the first time in a while, new is cheaper Now, of course, that's not apples to apples, square foot size, all of that stuff. But generally speaking, when you look at a historical chart over decades, median new is always higher than median existing. That's not true today.
Yeah. And so really what's happened there is just the saying that house prices are sticky is a saying that doesn't apply. There's a reason that is out there. And the reason that the saying house prices are sticky is because when there's an environment where there's downward pressure, there's a real resistance in the market, like that real stickiness. So that's where that saying kind of comes from. And that's where we've been in a window where that phrase really applies, right?
Absolutely.
But the builders are less sticky, right? So they're willing to do things like build a smaller home to adjust for some price there, right? They're willing to do some of these affordability adjustments, bigger spend on buy downs, outright price cuts to move that product if need be. And so what we've seen lately is we've seen the amount, and actually I'll just share the numbers. Let's just look at the data and not just take my word for it.
I like it. The man with the data. Man's got everything.
Here's the data. So we are at a 16-year high for unsold completed new build inventory. And
I want to get on that. That topic is very important. And I want people to hear this. This title of this video is going to be something like cash flow with new construction. The only reason we're having it is because we're at a 16-year high of completed homes. This will not last forever. There are builders that publicly said pace over profit. They are now at a point where that is biting them and they have a lot of inventory. So be aggressive when others are fearful.
And so while we're at a 16-year high, and I'll show the numbers in a second, for completed unsold new construction, on a national level, total inventory isn't even back to 2019 levels yet.
Correct.
Now, there's a lot of markets, over half, especially in the Sun Belt, that are above it, actually. But on a nationally aggregated level, we're not even back to 2019 levels for national inventory. And 2019 levels was like, almost a historic low.
Yeah.
A pretty big low compared to where we've been.
Below trend.
Yeah, below trend. Exactly. And so what's occurred is that during the pandemic housing boom, new construction, there was very little completed unsold new construction because everything was flying off the shelves. There was record amounts of housing demand in the market. Mm-hmm. Builders could sell more than they could actually even build. And so it makes sense that there was very low levels of completed unsold new construction. 2022, the rate shock occurs and we see it jump back to normal levels, right? And then we kind of stabilize for a moment. And then since then, it's been building again. Now, I should say that in my opinion, the best way to measure this is just like with inventory. It's probably best to measure it as months of supply because it's, that's taking into account the sales pace and then what's actually on the market. And so in that lens, total inventory is above 2019 levels when you look at it through a months of supply lens. But for new construction, it reins it in a bit. If you look at unsold completed as a share of housing starts. And so the reason that metric to me matters is if completed unsold new construction is really piling up, and then the builders are pulling back really big in terms of construction, that to me signals even a bigger weakening, right?
Oh, that's recession. That's what that is.
Yeah. And so in 2007, you not only had the huge, in 05 to 06, or 06, 07, that huge run up and unsold completed, but then so that's where it peaks out like let's say really 07, right? Mm-hmm. Weakness in my chart really peaks in 09, 10, because as a share of housing starts had really fallen off. And so I like this measurement.
Me too.
Tell us if we're in a tight construction market, in a normal construction market, or a soft one. And we're in a soft construction market. Absolutely. The softest in over a decade, but we're not seeing the the 07, 08, 09 kind of breakup, softness,
Yep.
right?
Yeah.
If you look at it through that lens. And here's the actual level of sales. And if you look at sales, we had a construction boom from like 96, 97, 98, and then all the 2000s. Huge construction boom, went on for a really long time. And then the market just, I mean, it ran into a brick wall.
Yeah.
And then you have the worst ever construction market, 09, 10, 11, 12, and it takes a really long time to get going again.
Sure.
And lately, if you look at the numbers, yeah, we've rolled off the peaks of the boom, but it's not seeing the 9, the 8, right, drop off there in sales. And a lot of that's because builders have done these bigger affordability adjustments, come down more in margins to move this product.
Well, that's really the question I have for you. And we're so lucky to have you each and every week because you have access to these CEOs, you interview them, you talk to them. I think I want to say it was 9 months ago, they were talking pace over profit. And, that appears to have led us to, lots of finished product. I'm curious, as they look at their go forward plan, are they still all gas, no brake? Or do you think they're getting to the point where they're like, whoa, we got to pull back a little and slow down? What do you think?
So I was at a private event back in June. Give me a second to pull it up. I just want to get the full quote. So this is a report I sent out to my Resi Club Pro members back in June. I was in an event, Bank of America. They had 150 institutional investors there in New York City.
Yep.
And Toll Brothers CEO spoke. And he said, on the soft side, Florida inventories are up. As I mentioned, parts of Texas inventories are up. Phoenix is still adjusting a bit with high inventories. A lot of that inventory for existing homes is builder spec because all of those markets have a lot of big builders there who are committed to a spec strategy.
And just so for the novice knows what spec is, tell us what spec is.
Spec is short for speculative. So a build that a builder starts without having a buyer, right?
Correct.
So they're building it because they speculate that they will have a buyer. So if they think that demand's going to be there, they're building the spec. They think that, there will be a buyer there.
Yeah, over the 90 days that it takes to take it ground up, they'll find a buyer.
And so buyers always will have the most leverage in new construction if they're finding spec that doesn't have that buyer demand and the builder needs to move it.
That's exactly the story of the house that I'm sitting in today. This house was built in a brand new community. The buyer backed out. It was like one of the only homes left between finished ones. And the builder's like, I got to get out of this so I can close the community. And let's just say I took full advantage of that circumstance.
That was a little bit how mine was before the market turned up in 2020. I'm the last in this 8-home community. The builder kind of wanted out of the area and they didn't have as much demand. Yep. And so I had a little bit more of opportunity with it.
Yeah. Again, this is the title of the video, right? You can get cash flow if you buy it right, get buy downs, get credits. Again, people in my community are buying new construction with over 20% discount. You just told me earlier that Lennar's public statements say they've averaged 15. So folks, go get it. Get aggressive.
And in some markets, it's more than that.
Oh, absolutely. Average is 15. It's got to be higher than that in some areas.
So let me complete the quote from Toll Brothers CEO. And so he said, so I heard a number, I don't know if it's true, that as many as a third of the overhang on the resale market right now is actually new unsold spec. That'll clean up over time because the builders are starting less spec homes in the softer market. And I think that naturally work its way out.
So that answers the question. They are slowing down. And it makes, that's what you would do just running a good business.
Yeah. And so how much of it, slow on the national level, we are seeing I could show you starts here right now. Here's permits that lead starts, lead completions. You're seeing a softness in single family.
Yeah, as you should.
How much we'll see, but I guarantee if you look in these, and I know this because I talk to them, but in the markets that have softened the most, parts of Southwest Florida, areas of Austin, areas of Phoenix, deep out in the exurbs, they pulled back. They're, because
had to.
The builders,
They're not charities. Yeah.
Exactly. Now, I do make a little bit of fun because Logomoto Xiaomi has a thing about how they're not the March of Dimes, and they're
Yeah.
not. They're going to make sure they are able to profit at a certain level to build. But Lennar is the one that's kind of really, has pushed the limits.
They're leaning in.
They've leaned the most into pace over profit. Many of the other builders have turned the other way, and they've publicly stated it.
Yeah, Toll Brothers actually highlighted that in their earnings announcement. I read this past month that they've really slowed down on purpose. Yeah.
And so of the 11 major publicly traded builders, and there are more than that, but the 11 that I track the most closely, because I don't have, I used to have access to a lot more tools where I could pull data. Like I had access to the Bloomberg terminal when I worked at Fortune and Cap IQ, all these places. All of this earnings data, me and then Megan Malice that works for me, we pull this out of all the builders
manually. Yeah.
So every one of these numbers, every one is from one earnings report.
Wow,
so
that's amazing.
We don't have a great, we're still working on a better automated process. But of the 11 that I track the most closely, all 11 saw a year-over-year compression in their gross margin level over the past year.
Well, you know what? Let me throw a complete right turn at you, and if you only have a few minutes, we'll make it brief. But I'm open if you want to go into this. The thing I wanted to ask you about was Scott Bessent the other day said that President Trump might be looking to create an emergency, emergency around the housing market. Have you had any thought on what that might look like, or had anybody discussions with folks what that might look like?
Well, I think one thing to keep in mind, and
I can remove that. Yeah.
So one thing I'll say is that whether you're a Republican or Democratic politician, I think it's probably smart to talk about housing affordability. Because we're in and this is not a housing lens. I'm just kind of talking about through their lens, right? Mm-hmm. And we're in a 3-year period where there's a big chunk of the country that is really getting squeezed, not just by housing affordability, but also auto and car affordability. And what do I mean by that? Is during the pandemic period, car prices and home prices went above inflation, right?
Yeah.
And then we saw an interest rate shock where the interest rates pretty much more than doubled. And so not only did the prices of those go up more than overall prices and incomes, but then they get the rate shock dropped on top of it. So the switching costs right now are really high. And for the car market, it's a little bit even more acute, because if you're in a home that has a lower rate or a lower monthly payment, you can wait that out longer, right? The so-called lock-in effect, right? Now, if you really have to move, you have to move, but people can wait it out more. Cars are not homes. Cars, their life cycles are shorter. And so there is a little bit of a lock-in effect with cars where people are trying to go longer with cars, but they can only do so much. So people that have to sell and buy something else, or just first-time buyers, really, them in particular, and then people who need to, buy a new car, they're getting squeezed right now. And especially if they're in the, the bottom half of the country, or even the bottom fourth that's getting squeezed more by credit cards, right? Because that's an issue as well. So that's a long-winded way of saying that housing affordability is a big issue. And so politicians of Republicans and Democrats are at a national level for Republicans, and then at a state level for some of these Democratic governors, they're going to be talking about it. And now what they actually try to do and how much of an impact that will have on housing, I'm very skeptical, because there are these housing cycles at play. One of the things that was at play is that during the pandemic housing boom, there was a pull ahead of housing demand, and a lot of housing demand concentrated at one time. And the Fed kind of allowed that to go further along than it should have. And it's really created the environment we're in now, where we're having to really smooth this out over multiple years, where we went up too high for prices, and now we're kind of trying to even this out, right? And so the housing cycle is at play. And now in terms of the things that they can do, I think maybe at a local level, I think that there's, things that could be done there that maybe at the edges and at the margins improve things. But at a big picture federal level, the quick levers that help it, I don't know. And the lever that politicians like to pull the most is just creating more demand.
Bingo,
and
bingo.
that's usually their go-to.
Well, again, you think about it, because when I think about this, you really have two options. You can go the supply route. You can go deregulation. You can create incentives. You could, all of that. But that is slow and hard. You won't see really any true impact for years. Or you go fast and sexy, down payment assistance. Obama pulled out the $8,000 tax credit or whatever that was back in 08 or 09, whatever that was. You want to get a splashy headline? Go give some free money to some cohort, and you will move some inventory.
And then the other thing that's getting talked about that is actually a way more significant discussion to have in housing is not the federal discussion. It's actually what some of these states are trying to do with property taxes.
Like Florida.
Yeah, and now where I'm at, Ohio, Vivek Ramaswamy, that's running, one of his big is property taxes.
Okay.
And so during the pandemic, you have a big run up in overheating of prices. Price is the lead.
Yep.
And so you have an echo boom that occurs for home insurance, and you have an echo boom that occurs for property taxes.
Yep.
Now, how that varies and gets implemented across states, there's so much nuance to property taxes. It's very nuanced. And I'll be honest with you, I'm still a little confused about how the Ohio property tax works. And I read about it fairly frequently. And I've been in contact with
I'm still confused.
Real estate attorneys here, because I've reached out to experts to kind of better understand it. And I have a better grasp today, but there is a lot of nuances to it. But so politicians are under pressure to decrease property taxes, because property taxes have now echoed in a lot of these states and counties what's happened for home prices, and potentially what happened. I don't know if they'll go all the way through with.
My question for you, anyone, and again, I've not studied this at all, but anytime you say you're going to turn off an income stream, that means another income stream has to be created. So if Florida does pass this property tax, I mean, I don't know what property taxes in Florida collect. I'm sure it's $100 million or more. Either A, you're going to cut services, which seems highly unlikely, or you're going to raise that money somewhere else. Like, don't just, give me candy and, tell me this or that. There's got to be a give to get. I don't get it.
Yeah, actually, give me a second. Let me just pull. I don't share the property tax data that I have that often. Let me just, last thing before we end the conversation. So the SALT cap increased for the next couple of years from 10,000 to 40,000.
Yep.
Something also to note. So here's median annual property taxes paid by county. But, a part of this is downstream of just overall house prices.
Yeah, values, yeah.
So you really got to look at typical effective property taxes by county. This is a calculation that me and Megan Malice at Resi Club do. And so a lot of the Northeast, Illinois really jumps out. And Texas doesn't have the
state income tax. Yeah.
Yeah, they lean heavy into property taxes as some of the nuance. And so here is a chart, and this has got to be one of the ugliest charts that I do, but there is a lot to it if you dig into it. So this axis is effective property tax rate.
Okay.
This axis is top marginal state income tax rate.
Got it. Okay.
California actually has fairly low property taxes.
Oh yeah, Prop 13 is amazing.
But California has really high income taxes for a state.
Correct. Amen. Yes, it does.
Where you get into the big squeeze that I consider is this quadrant here. And this becomes the New Jersey, New York. That's where you kind of have high of both. And then Texas is kind of interesting because Texas has they don't have any. They're in the 0 bar for state income tax. And then their property taxes are pretty high. That's kind of interesting. Florida, though, they're kind of low for both. So now they do have home insurance, which isn't in this.
Yeah, that ain't cheap.
Yeah, and I bet there's a lot of variability throughout
Coastal, yeah.
Florida on this, but yeah, and
Very
I don't
cool.
really know why I shared this chart, but
Yeah, you wanted to show us another one. You are the data guy. Housing. If somebody wanted to get data on housing or be part of your free or paid stuff, how do they go get it?
yeah, if they want to sign up and read my newsletter, I send out a couple of free issues per week. Go to ResiClubAnalytics.com. If you want to get signed up, get more of my research, I do 3 additional housing research articles per week for Resi Club Pro members. Go there and sign up for Resi Club Pro. And then if you want to follow some of my work, you could go on LinkedIn. I'm there pretty frequently, and then Twitter. And then, of course, I come on your channel. I try to every Thursday.
You're amazing, man. Take care of yourself. Thanks.